Hey guys, we'll do a quick update video. Okay, this high right here at the 784 is actually a pretty calculated high off of this 10-minute chart. Okay, and it was actually confirmed today on this 3-minute wave to the upside. So there's actually two targets right here. They're actually about 7836. So, it wasn't perfect to the tick, but up in this area, we knew that we're probably getting extended not only on the 3-minute, but on the 10-minute. Okay, so off of this high, it's really the upper targets are important, but it's really what happens after the target is hit, because that's what flows into the next pattern. And each pattern flows into the bigger chart, but it also flows into the next pattern. Okay, so we did close at support as far as 3-minute. Okay, but since this high is a 10-minute pattern high, we're looking for probably more of a correction. Okay, but it's always going to start with a small correction that turns into the big correction. It's really understanding what to look for and really where the rejection of the patterns are, just as much as where are the patterns, right? So that's really the only thing that can help you flow into the next pattern and really get an outlook of what is going to happen next. Okay, so really all these lows have been very calculated. Okay, on the last chart we posted on the blog, pretty much every low has been calculated as support. Even though market comes down, it's still bullish. It doesn't matter, it's coming down for that time. It'll always come down in a bullish trend. That's what builds the higher lows. Okay, but every single one has been support with a target that you can get before it's there. Okay, and then what happens off target is the next pattern. That's what's really the most important, because what's happened here, once it's here, it's already there. So it's understanding what happens next. So for people that have been following us, we always talk about small circles. Okay, then it turns into the bigger circle. And then there's even always a bigger circle than that, okay, which is actually on a bigger time frame. Wouldn't really make sense to draw it on here because you can't really see it. Okay, but if we look at something that this is a 10-minute chart, there's always different degrees of the circles, right? Small, which is a 3-minute, even though we're looking at a 10-minute chart, this small circle is a 3-minute pattern. Okay, if that breaks, it goes into the medium. Okay, but if we go to the bigger chart, you'll notice how both of those are still very minor to the last leg on the 60-minute. And that's where or why we use all three time frames, 3, 10, 60. The 10 and the 3 are always trading inside the 60-minute. Always. So to ignore the 60-minute pattern, you're really ignoring what's going on around you. So you're most likely going to go short right at bigger support. Okay, because in reality, it's you miss the first wave, maybe even the second wave. So you try to short the third wave. It's too late. Okay, people are taught to wait for the trend to be confirmed to go long or short. The problem with that is if you're doing it intraday, you're too late. Okay, so, and that's why people say it seems like as soon as I go short, the thing reverses. It's true. It's because you're too late in the wave. Okay, so these are still very minor compared to the last 60-minute wave, but we can't just have a 60-minute target, say 745, and say it's just going there in a straight line, right? That would be unrealistic. Okay, and when we're day trading, we need to understand each pattern. So we understand if we're trading the 3-minute, where's 3-minute support? If I am trading short, counter trend, I want to know support. And I want to get out before support if I'm short. I don't want to trade in hopes support breaks. Okay, because that's where all prior highs, if you don't understand how to get major and minor targets, all prior highs look major. They feel major when we fall off of them. But for the most part, they're really not. Really only one or maybe two highs in the sequence are really only major. Okay, so trying to pick the top and shorting the first wave is something we don't do. And this is a good example why. Today we were doing a members webinar we don't try to catch this. Okay, if we were going to short, it would be more over here. Okay, but it didn't even really tell us to do that, and then it broke the correction pattern, which is bullish. Okay, and that's why the result was upper target was hit. So there's always going to be two different outlooks. Sometimes they're both the same direction, sometimes they're opposite of each other. But one of the outlooks has higher odds. Okay, and for most traders are trading the low odds in the wrong direction. And I can say this because I've been trading a long time. We've taught a lot of traders, and that's a level or a hurdle that everyone has to get over. It's kind of like everyone says, if I would have done the opposite, I would have made money. It's true to a certain degree, but you still need to understand when the pattern is broken for the opposite to occur, to actually participate in it with confidence. Because it's one thing to say, I think it's going up. It's another to actually be in the trade and hold the trade. So without confidence, there's really no way to hold the trade. And that's where your stops might always be bigger than really what you're making when you win. And it's really just kind of a dangerous scenario. So, if you feel like you're chasing these waves, it's because you are. And it's really understanding what to look for. So, kind of getting back to the point of the video, on the 3-minute, yes, it's support, okay, but we have odds on this high, so of bigger target. So we're looking for a bigger correction. So what that means is the market can always go up off minor support. It did it here, okay, and it did it here. So we can say that minor support is holding in the market right now. Eventually in that sequence it will break. But that's why we're not trying to catch the very first move. We consider this all one move. So even though there's a wave within it, we have a way that makes sense to where we're not trying to catch it on a bigger trade. Now, it's one thing to scalp it. It's another to try to catch it and hold the trade. It's not a good trade to hold because it's counter trend. Okay, so really the outlook is we closed in a correction at support. It's minor. Okay, off of a major resistance. So major resistance into minor support. Even if market comes down here, it most likely would pop off minor support. Remember, it's what happens off the levels is what's more important than the actual level. But they're both very important to the sequence. You really can't have, you can have the levels without knowing what happens after. But taking it a step further, to really be successful, you have to know what to look for after that confirms the pattern, that confirms this high. It's nowhere near that yet. Okay, and in waiting for it to be confirmed to actually go short, that has saved us from entering short in any of these moves on the 3-minute, 10-minute, and 60-minute. I know everyone's trying to pick a top, but it's not good to do that until it's really confirmed. And it always starts out minor that could turn into major, but don't trade major right away. Very rarely does that happen, only off of news. Okay, so the purpose of this is we're opening in correction tomorrow, which means it might be a little bit more wild on the open, and it's going to try to suck you in more because corrections are harder to trade. Less odds of success even if you're right. Okay, less profit potential. So it's really better to wait for the bigger pattern to play out and then catch it. Okay, even if you're only scalping, doesn't matter. It's better to wait for the actual leg of the move and scalp it multiple times in that direction instead of trying to, catch every different direction on a small chart. That I've never seen anyone make money doing that. Okay, so the goal of scalping is really to trade more contracts for less points. And once your goal is achieved, it's achieved. Stop. Okay, if your goal is 2 points on the trade, 2 points, you're out. That's really the only way I've ever seen success in scalping. So even though we're up at a top that is calculated, we are still bullish, but we're in a correction. So this small could turn into the bigger. Okay, so we have our medium and bigger support levels in case that pattern happens. So hope this video kind of helps in staying with it, and really it's just about learning what to do after the levels are hit.